Welcome, everyone. I think I've met everybody. My name again is Chum Struby. I'm the host here of Club East St. Paul, and I want to welcome every one of you in this very cold weather. I hope you have lots of layers on. I certainly do. We are here, I know I've had a few people ask me, we are here on the third Wednesday of the month, every single month, except November and December due to the holidays. But we're back here in January, and that will be January 15th. And then we will have a panel on the topic of EOS. It's our second EOS panel, and it's going to be on a concept called Rocket Fuel for Your Business, talking about the integrator and visionary role. And we also have events at the Minneapolis Club. Those are typically first Thursday. January 9th, we have Selling on Emotion, a panel talking about that. And January 23rd, a family business guide panel. And I think Rick is normally here, but he is not here. And then I want to, before we get started, just welcome again and thank our sponsors. We have the University Club, who hosts this events every month, the Irish Titan, which is an e-commerce digital agency, Boulay CPAs, Winthrop and Weinstein, and my company, Legal Shield, providing benefits to employees. I'm super excited about our topic. I haven't seen it done very often around here in the Twin Cities, and it sounds like, from what I'm learning so far, there's a lot of opportunities for small businesses. So I want to thank Mark for helping with forming our panel, and I want to thank our panelists for being here. And with that, I'm going to bring up, since I know nothing about this topic, you didn't want me to moderate, so I brought someone more intelligent about this topic, Mark Willett.
Thank you. Well, I'd like to welcome all of you, and on behalf of the panel, for braving the cold weather. Before I get started, I'd like to just note that the state of Minnesota also supports our international trade, and we have two representatives from the Minnesota Trade Office who are here. And maybe Steve, if you would just say a few words.
Sure, thank you so much, Mark. My name's Steve Riedel. I'm with the Minnesota Trade Office. We're the state's export promotion agency, and we often offer training courses like this one. So we're really grateful that Club E and all of our panelists are promoting a message that we really believe in, and that is exports are good for businesses, especially for small and medium-sized businesses. So a lot of our services are free. We also organize a governor's trade mission, so we play a nice kind of symbiotic role with folks on the panel, including the consultants like Michelle and Mark, and we make mutual referrals back and forth, but feel free to start with us. I cover Western Europe, as well as environmental and energy industries, and I'd like to introduce my colleague Abdul. His full name is Abdul Wahab Mohammed. He speaks 4 languages, and he's relatively new to our office. But Abdul, maybe you can mention this really nice initiative we have going on with Power Africa. I think people will be interested to hear about that.
Yes, my name is Abdul, and I cover Africa, Middle East, and India. And the one initiative that is now going on is the Power Africa. That is a federal initiative that all federal agencies are working together to make U.S. businesses that are focused on energy to have a footprint in Africa. So energy industry, there's a lot of contracts, RFPs that you can work with. You can work with the embassies, you can work with the U.S. Commercial Services, Exim Bank, the Millennium Challenge Corporations. All of those agencies are here to help if you're a U.S. company that is focused on energy to have your footprint in Africa. So that's one of the initiatives that.
Thank you. Thank you. Well, our topic today is, are you open for business with the world? And although we do $2 trillion of export, and there are 280,000 companies that do export, that's only less than 1% of the companies in the United States. That's the lowest percentage of any developed country. So, yes, we have a great internal and home market. That's wonderful. But our companies don't participate in the world market as they could. And it's never been easier. It is true that of these 30 million companies that do export, 58% only export to one country. Might be Canada, but not Mexico, or vice versa. So the question is, how do you develop your export? We're going to talk about that. We've assembled a panel to walk us through that process. And so today, there are good reasons for you to export. The access to new markets has never been easier. 70% of the purchasing power in the world is not here. We can help you not only improve your top line and bottom line profitability, but improve your valuation as a company. So with this panel, I'm going to ask them each to introduce themselves. And why don't we start with Jason?
Hi, my name is Jason Fritz. I work for Eide Bailly. We're a regional CPA firm, and I specifically work in international tax, the consulting side. My wheelhouse is in something called transfer pricing, which deals with intercompany transactions, but I've been doing transfer pricing and international tax for, I can't believe it's going to be 16 years in April. I've been with Eide Bailly for 4.5 years, and previously I was with a couple of the big four firms assisting companies expanding their operations globally. Undergrad was done at University of Wisconsin-Eau Claire. I was a print journalism and economics double major, and I have my MBA from the University of Minnesota. And I am not a CPA. I've been asked that a few times here. I am an economist, but I know enough to be dangerous. No, I don't sign off on tax returns, but I do help companies when it comes to tax consulting.
Dennis.
Yes, I'm with the Export-Import Bank of the United States, known as EXIM Bank, or, excuse me, just EXIM. And we're a federal government agency that is involved in export finance. So even though we're Export-Import Bank, we just do export finance. So we do this for large, medium, small businesses. In fact, 90% of the transactions that we do are for small businesses. And so people in the field like myself mainly are working with small businesses. So our mission is helping companies get the financing, mostly what we do is insurance, that they need so that they can export successfully and increase U.S. jobs. So our mission is U.S. jobs through exports. So we do this in two ways. We have working capital available, and we have export credit insurance, and I'll talk a little bit about that when we have a chance. So I'm in the Minneapolis office downtown. There's 3 agencies there. I'm the one person in Export-Import Bank. Then there's the commercial service. And what they do is they help you find companies to work with in other markets, other countries. And there's the SBA, and there's one guy there that does exports like me. And I'll tell you when we get a chance what he does too. So yeah, that's mostly it. Those 3 agencies were called the U.S. Export Assistance Center, and we're in downtown Minneapolis. Thank you.
Michelle?
Good morning, my name is Michel Lockney. I'm originally from Sweden, but my father's French, so I hide it with a very French name. I came over here as a student in finance and economics and ended up in international sales by accident. I've been in it for 35 years. I've worked for 8 Minnesota-based manufacturing companies. Several have been owned by overseas European companies, for example. So I've worked in different industries, companies ranging from 5 million to 200 million, Every single one have been an exporter. We're anything from a couple percent to 40, 50% have been export oriented. Industries I've worked in include IT, aerospace, waste products, so very broad range of that as well. 4 years ago, I started MarkTech as a fractional export sales consulting firm, helping small, mid-sized Minnesota companies increase their global footprint in sales. We typically work either on a project basis, a specific goal or market that they want to get into, or maybe on an ongoing basis, sort of part of their sales and business development team working for the owner, president of the company that's sort of thinking more strategically. So it's over to Mason.
This is Mason Anderson, Trade Acceptance Group. We're an independent broker, specialty broker for primarily trade credit insurance. So we actually work a lot with Ex-Im Bank. We're one of their largest brokers, been broker of the year 4 times now with Ex-Im. And then also private sector insurers for places where Ex-Im doesn't fit. So what we do is we help on the financing side, getting ideas of what the transactions are, how you might be able to cover yourself or cover your risk with insurance. And then several of our partners are also ex-bankers, so we also are involved some on the financing side for packaging export working capital loans through the SBA or Ex-Im. So
Can you explain what trade credit insurance is?
that's actually going to be one of our first questions. Yes.
The reaction you have is not uncommon at all.
Yes.
Yep.
The other thing with Dennis here is Ex-Im Bank, it's just Boeing that can use that. Both are incorrect. It's actually
Mark asked us to put our list of questions and our primary question first, and that's my primary question.
You and 99.9% of the country don't know what it is, so.
So let's start out with Michelle. Based on your vast experience working for and helping small local companies export, what are the key steps to start?
Okay, so like I say, I've worked for a lot of different companies myself and worked with a lot of small companies that have gotten into exporting. And typically the way they start is one of 2 ways, and they're kind of what I call accidental exporters. One way is that they get an inquiry by phone or email from some crazy guy somewhere in the world, New Zealand, for example, says, I want to buy a container load of whatever you're selling. And people are like, wow, extra sales, why not take advantage of it? So they quote a price, send the wire transfer instructions, and said, okay, come and pick it up. It's an extra sale. Haven't really do a lot of extra effort on it. I don't really understand much. Who is this guy? What market is he in? What's he going to do with it? Gee, maybe we could have other opportunities. So that's one way people get into it, and there's nothing wrong with that. It's kind of a normal way that somebody, finds you and think that you have a really good product. The other way that's also very common is that a lot of people have, big U.S. customers. A lot of these customers are global, and they have, John Deere, for example, has 120 operations overseas. You're a supplier to John Deere, guess what? If you want to stay a supplier in the U.S., you got to go global with them. So use an example. There's a little tiny company in Bloomington called Donaldson, $2 billion of revenue. You know how they started? They followed CAT overseas. They make filters for all types of equipment, including diesel engines. And CAT said, we're going to go over to Europe. You need to come with us if you want to stay a supplier. So it might be you're kind of forced to come along. But once again, that may require that you supply a product that's already approved, so you don't have to go through a process of being approved as a supplier, which big companies can take a long time and cost a lot of money. But it doesn't really mean that you understand much what that customer is going to do overseas and what's the potential in Europe or China or wherever it may be. So what I try to do with Mark as well, we're trying to do is to really put together a plan, an export growth plan, and how to do this thing. So it involves a lot of different steps, but it's really sort of sitting down and talking, okay, so, what markets do you want to go after? What customers do you have? A lot of times, there's some similarities in what you do in the U.S. and with the type of sales channel you have overseas. So we put together a plan that sort of talks about, what are the key markets we want to go after? What are they, what is our selling features? Do we have some competitive advantages? Do we have some IP that gives us an extra protection, for example? So we put together a plan, then we go out and do some market research in those key markets identified, looking at, what's the competition, what pricing, Is there some barriers to entry? For example, a lot of equipment suppliers are going to Europe. You have to have a CE certificate. You have to be certified if you have electrical equipment, industrial equipment. So there's a process you have to go through in order to sell the product at all in Europe. So those are the type of things that we look at and sort of put together a plan that sort of matches with the goals and objectives of the company. You set some goals, you set some revenue targets, and you follow that plan. And we kind of help to do that for the company on a part-time basis. And sort of sometimes we go out and help the company sell the product. Other times it's finding the right business partners for them. So it's really working with the owner that sort of wants to have a bigger vision, more strategic look into the future. And then a lot of the time we use tools like Ex-Im banks and foreign credit insurance to help our company be competitive with the markets out there. And I think Dennis will talk more about what other countries do that puts us in a weak position, from a financing standpoint, for example.
Well, Dennis, do you want to tell us about what that competitive position is and what Ex-Im Bank does for small companies?
Yes. So you're a small business and you're going to sell product overseas. So the first thing you're thinking of is, okay, yes, you can buy my product. Send me the money and we'll send you the product. That's, cash in advance. Historically, for U.S. companies, was a way of doing business. And I've met a lot of companies in Minnesota over the last in these 2 decades, and I would say it like this: in the last decade, Minnesota companies or U.S. companies would ask to be paid in advance, and they would be. But what's happened since the great financial crisis, pretty much this decade, is other governments around the world have put together their own Ex-Im banks. They've really accelerated countries around the world that have an Ex-Im bank. And what they're doing is supporting their exporters. So what credit insurance is, your buyer says, well, yeah, no, we're not going to pay you in advance. You're going to give us 60-day terms. And we're going to pay you in 60 days, just like all you U.S. customers pay you. And you're going to say, well, you're either going to say no thanks and then go do something else. But what's happened is more and more you're walking away from too many opportunities, and we don't want you to do that as the federal government. We want you to do these opportunities and hire more people and be more successful. So what credit insurance is, when you offer open terms, you give them 60 days or 6 months or a year to pay. We do our due diligence, and if we qualify, accept that buyer, we'll accept and take the risk that they don't pay. And we're going to cover you for 90 or 95% of what they owe you. So you can ship and feel confident that the federal government is going to cover you at 90, 95%. That's really how it's played out, like I said, over the last 2 decades. The Chinese, the Japanese, the Koreans, all the Western European countries, they're offering this type of insurance to their manufacturers and service suppliers that are exporting, so that when you go in to get the deal and you say, yeah, I want cash in advance, so you say, well, I'm getting terms from your competitors. So that's what credit insurance is.
You want to give them the statistics about China versus us?
I was just...
this blew me away even.
So in 2018, for short-term credit insurance, which is, you give terms out to a year, the U.S., we supported $2 billion worth of business. That was low for some reasons, but we supported $2 billion. China supported $400 billion. So what that means is a bunch of Chinese companies are running around selling their stuff, offering credit terms because their government's going to take on the risk. So the countries I mentioned are really the leaders, really the leaders in that. So that has really increased competition for U.S. companies. Now, it doesn't happen all the time. It just depends on your industry. You always want to get paid what makes the most sense for you. That might be paid in advance. It depends on what your product or service is. It might be 50% up front, 50% at shipment, etc. You do what makes the most sense in each and every situation.
So But do they come to Dennis or do they come to Mason?
They could go to either. A lot of times they come to me, a lot of times they go to Mason. If they come to me, I get them out to our broker
Okay.
network. There's one trade credit insurance specialist in Minnesota, and that's Trade Acceptance Group.
Okay. Mason, tell us about what you do.
So yeah, once we get a handoff from Exim or from another referral source, if someone reaches out to us directly, what our main goal is to understand the transaction that you guys have and how that fits into the insurance. There are restrictions for the Exim program that you have to meet in order to qualify, and to understand the type of transaction you're doing, how you're selling it. Are you doing consignment sales? Do you have an overseas warehouse where you store stuff and ship, so it's speed to market? Those types of factors to get the insurance policy in place. So as far as how the insurance policy works, Dennis already mentioned some of those. When you give credit terms to a buyer, you have the risk that they're not going to pay you, especially if you're giving an open account. You ship it, you give them the title documents, and until they pay you, it was a gift. So the insurance adds the added benefit that if they don't pay you, and you did your part, it's not a dispute, then you have a source to draw that payment from. That's really the insurance in a cusp. It's just kind of like anything else. It's a little bit different from property casualty in the fact that you have to manage the policy actively. There are requirements you have to meet. You have to have documentation in place to show that they ordered it, you shipped it, they're insured under the policy. That's our main job as the broker, to help train you on the policy and the requirements and walk you through getting buyers approved and getting everything in line so that you're actually covered.
Give an example. I have a client in Pine River. They're a 17-employee company, a couple of $1 million in revenue. They make an attachment that you can put on construction and agriculture equipment to pick up logs and make firewood. And they started exporting a couple of years ago. And we had a new distributor in the UK that looked very promising, had financials that were so-so, about £1 million in revenue, and they insisted on getting credit. And the owner wasn't comfortable doing it himself because, once you ship the product, it could be a gift, right? So I introduced him to Dennis and then to TAG, and we put an insurance policy in place and allowed us to extend the open account to them, and they placed one order, another container load. So it helped my client grow their business, and they're a very small manufacturer, and doesn't have to be manufacturing either, but it gives you a competitive advantage. And overseas, credit is much more commonly given by a manufacturer. So the insistence on cash in advance is very different from a French manufacturer or Japanese or whatever else. So in order to be competitive and really grow out there, you need to have a tool like this thing. A lot of people don't know. They think it's more for just the Boeings of the world, which is completely incorrect. There's specialized programs for very, very small U.S. companies to utilize.
And because of that, it can't be overly expensive, because if you're doing a total of, the cost is dependent on the location, where you're shipping, what terms you're offering. Obviously, shipping to certain locations in Asia are not necessarily the same risk as shipping to the UK. So that all has a factor into it. Whether you're giving 270-day terms or 30-day terms goes into the factor as well. As far as percentages, generally speaking, they're well under 1% as far as the premium that's required. And Exim Bank is actually unique in the fact that it's a pay-as-you-go. There's a really small $500 for a small business payment up front to get the policy in place, but after that, you only pay when you actually have shipments to insure. So there's no upfront cost that you have to forecast your sales for the entire year, pay an associated premium, and then regardless of what your sales are, you might have paid that premium already. Exim, it's you pay in arrears.
So you're paying per sale?
You pay per shipment with Exim Bank. Yeah, it's different on the private sector side, but with Exim, it's per shipment as you have them.
Yeah, one example would be one of our policies, if you're offering out to 60-day terms, the premium rate is 0.65%. So for a $10,000 shipment, to cover the risk of that not being paid, that's $65. So it's really, for a small business, yeah, it's very affordable.
Yeah, like the client I mentioned in Pine River, so they had about $60,000 worth of sales in the span of, say, 6 months. So there was 2 shipments, so that was what, $340 or something for having it insured. So I mean, if we look at the cost of insurance for other things, it really is very, very affordable. It's intentionally done that way, so it's a good target for small
That type
companies.
of policy Dennis mentioned, that's for 95% coverage and no deductible for that particular policy. So, I mean, it's a very small amount of money for a very large amount of coverage. And then it also goes into the financing aspect of it, because most banks will not lend against foreign receivables if they're not insured. So by getting the insurance in place, you can now include those assets into your borrowing base to potentially increase your line of credit with your bank. And quite a few of our clients use the insurance policy specifically for that. Even beyond the risk mitigation or being competitive is for the financing piece.
So is there actual import review on each transaction then, or?
No, it's with the application. With Ex-Im Bank, their charter from Congress requires them that they can only support U.S. exports, meaning that the product has to be at least 51% U.S. cost. That's the products that you're putting into the assembly, that's your overhead, your labor, all of that goes into the U.S. cost portion. So if you meet that requirement, that's something that you are agreeing to and certifying in the application phase. So after that's all there is as far as review from Ex-Im's point.
But I mean, on the transaction itself, the insurance transaction, are you looking at the buyer?
Yes.
Yes.
The credit is on the buyer. The buyer is the one that is reviewed and approved. So depending on the type of policy you get, you can have kind of an umbrella policy where once that's approved, you can add multiple buyers that can be approved in the same policy, or you can have a policy that's specific for one customer.
The other thing, the beauty of it too, the system, like in this UK distributor case through my client in Pine River, is that Ex-Im Bank did the background check without him even knowing about it. And we didn't have to, so it was done on the backside. We did get him to send us a financial statement, but it wasn't necessary. But so the nice thing is that you can actually sort of have a checkup on who the person you're dealing with without really knowing them all that well yet. So that was an extra benefit for us as well in that case.
So, Jason, what are the top tax-related considerations that you have when expanding internationally?
Well, Mark, so you said earlier, and I agree, it's never been easier to do business internationally. It's never been easier to export or take your business internationally. However, it's never been more complicated from a tax perspective. I mean, both U.S. and internationally, it just hasn't been any more complicated. So, so we help firms, companies go international, or well, hopefully up front before they go international. Most likely, as Michelle experienced, like after the fact, and they're in the other country. So, answer your question? So you have corporate income tax to worry about, in the other country, depending on the type of sale and export. Most likely, if it's just an export transaction you're selling, you're probably fine. You don't have to worry about that as much. However, there could be potentially what we call in the U.S. is more like sales tax, indirect tax, VAT. So taxes that countries, it's VAT, indirect GST type of local sales taxes are their main source of revenue for countries, and they take that really serious. And it's something that ultimately the consumer is supposed to pay, but you may be responsible for that type of tax up front, and you'll have to submit for repayment. Individual taxes, so if people are going overseas and are being taxed in that local jurisdiction, so individual taxes as well. So those are the main types of taxes. There are other things to consider as well. We help companies that they may be starting out exporting, but they may be kind of worried about their IP or certain things. They may not want to just send a product over there. So they may need assistance, and hey, listen, instead of just exporting and sending the products, we might actually want to create a legal entity. And what does that mean? So are there tax forms? Are there local things that we need to be worried about? So you have the legal entity to hopefully protect your IP and kind of help kind of shield that and fight any IP leakage or anything like that. But then you have additional forms. You have essentially a nexus, so you have a presence, and that local country is going to want to tax you, and they're going to want to tax as much as they possibly can. And so we help kind of create or structure a tax efficient way to do certain things as well. Additionally, and I think we're probably going to get this later, there are incentives from a U.S. perspective that
Go
we'll
ahead.
talk about.
There's a secret program.
Secret, the top secret sauce. No, it's so there's a few incentives. There's more incentives after U.S. tax reform, which I can't believe is actually coming up on 2 years, 2-year anniversary of U.S. tax reform. But there's something called IC-DISC, and it's been around forever. And it's not my specific area of expertise, but I've learned a lot about it. And I initially, when I heard about it, was like, this is too good to be true. Like this is crazy. But it's an incentive for U.S. companies to make stuff here and export it. So you can get essentially it's a reduced tax rate through a paper structure. And I will not bore you because there's probably not enough coffee in the room to actually keep you awake for the actual structuring. But it's a paper kind of corporation that allows you to take a reduced tax rate on those exports. And for individuals and flow-throughs, it's less after U.S. tax reform. It's about a 6% tax savings on those exports. For C corporations, it's actually about 16 to 17%, depending on how you do it. So this incentive has been in place for years. And again, I know it sounds too good to be true. It's well accepted. As long as you follow the clear rules and you do a study, it's widely accepted. The IRS doesn't bat an eye at this. It's well known. It's an IRS program. It's called IC-DISC. It stands for, and please don't write this down, it's called Interest Charge Domestic International Sales Corporation is what it stands for. A marketer did not come up with that. The IRS came up with that. So if you hear it, it's IC-DISC. Just go by IC-DISC. And so you get it's the incentive to actually make stuff here and export it, and you get a reduced tax rate.
Is that related to the R&D tax credit?
It is not.
No.
Which I will not talk about. So the question I ask myself when I heard about it and want to learn more about it when we hear about it is, well, what's the level, right? So there's a break-even point. Generally, if you export $1 million or more U.S. dollars per year, there's no reason why you shouldn't do an IC-DISC study. You're leaving money on the table, so you can reduce your taxes. So you do need to do a study, and you do need to look at it annually, and there are some additional forms to file. But above $1 million, it pays for itself. It makes all the sense in the world. So you're just leaving money on the table.
If I can comment, I've worked for 8 different manufacturing companies. 3 of them have had an IC-DISC. It's just the name is so odd. It doesn't make any sense. But last company I worked for was a corporation. It was $200 million in revenue. We did $40 million in exports. We had an IC-DISC, so 16% tax savings on $40 million. There's some serious money involved there. And it was really, it took one of our accountants a certain amount of time per month and a year, but it was really basically an accounting function. Yeah. Paper transactions. We did the actual exports, but it's completely legal. The IRS encouraged you to do it, which is kind of odd for the IRS. They actually encourage you to do something like that. So fantastic opportunity, but you do have to hit that. The million mark is exactly what my experience too is. That's about where it pays for itself. You don't make a little money, and once you get over that, then it's all bottom line dollars straight to it. So.
And I say it's too good to be true, but if you do think about it in the context of our economy and what the U.S. government is trying to do, is trying to encourage us making more stuff here, right? And hiring people and creating jobs and then selling it somewhere else. So, and I don't know if we're going to speak later about tax reform as well.
Well, go ahead.
Okay, sorry. So I'll speak to one additional incentive that came about because of U.S. tax reform. So U.S. tax reform had a lot of changes, especially to the international portion of our tax laws. And one of the changes was to incentivize companies, again, to do more stuff here. So I said earlier, make stuff when it comes to IC-DISC, do more stuff, so more IP-generated type activities here in the U.S. And so there's an additional incentive. You don't have to structure it. It's just there. If you are exporting overseas, it's called Foreign Derived Intangible Income. And what it does is it says, hey, anything you're kind of making here in the U.S., less some arbitrary, to me it's arbitrary, 10% on your fixed assets here in the U.S., less any costs that are apportioned to making that stuff here in the U.S., that amount gets a 12.5% tax rate versus whatever tax rate that you would normally be paying here in the U.S. So if you're an individual, it could be in the 30s. If you're a C Corp, it's 21%. So now you're down to 12.5% on those products. So again, same thing. You're trying to incentivize companies to do more stuff here in the U.S., maybe shift more things back. We've heard the stories over the years of companies shifting more and more stuff, especially related to intangible property, offshore. Now they're trying to incentivize companies to actually come back to the U.S. or stay in the U.S. and do more intangible-based activities here. So.
What's the name of that again?
It's foreign-derived intangible income. So FDII is the common name. We like to call it FDII amongst our crew.
Yeah.
So you may hear any of those combinations. Yeah.
Alphabet soup.
Michelle, what kind of sales channels do you recommend then for your clients?
Okay, so because my entire background has been in sales and business development, so this is sort of my specialty if I want to say anything specific. But when you have this crazy Australian or New Zealand guy contacting you and you start selling to them, typically you want to call them something and they want a certain price. So there are different types of what I call them sales channels. You can call them customers or whatever. How you go to market, who sells your product. So when you're an export, there's about 6 or 7 different options, and it doesn't mean that you just use one. Most companies I've worked for have had multiple sales channels. So I'm going to just go through them, sort of explain pros and cons of each one. So the most common one for exporters is to have a distributor. Distributor basically buy the product from you, so they pay you, they buy it, it goes to them, they typically inventory it, they sell to a dealer, reseller, or to end users, or both. They have the ownership of the product. They have the inventory. They tend to do some type of promotion, around your product, sort of become like a brand ambassador for you, whatever else. You might pay them some money or help them with it. They have sort of the control over it from that aspect. The advantage is, of course, that you tend to not have to have so many distributors because there's a certain amount of management and support and maybe training and just day-to-day communication with your overseas customers, and then you have the time difference and languages and everything else. So it tends to be sort of favorable that maybe I have one distributor in Europe or one in the UK and one in Germany, and I'm happy, crazy about that. The downside is distributors tend to ask for a bigger discount, so you give more of your margin away. But on the other hand, like I said, they stock, then then they promote and sell it as well. The next level down would be a dealer. Caterpillar, for example, right now, they deal with big dealers. Like you have one in town here, for example, Ziegler. So they tend, in Germany, 85 million people, huge economy. They have one dealer, exclusive, with 12 locations. So they have elected to go direct. I mean, of course, they've been doing this for a long time. So they elected to go directly to the dealer model. That dealer that carries inventories, they press promotions, trade shows, service warranty, and all those type of things. And they sell nothing but cat. They're not allowed to touch anything else. So that sort of works for them, and that's one of the options a lot of my customers, our current customers, do as well, is working with dealers that sell their products. You don't give them as much of a discount, so your margins are better, but you also end up having more of them, which means more administration, more logistics. They often don't stock any products, so you might have to have a warehouse in Europe, to feed products to them. So there are pros and cons with that one as well. The next level that actually more clients now are starting to look at is, well, we got Amazon and people buy across the world. I buy products from China and Hong Kong. Why can't I sell my products the same way? Well, it depends a little bit on what kind of market you're in. I think if you're more consumer oriented and you don't have products that are very large in physical size. My client in Pine River, it's a 1,500 pound steel machine. It's not something that your average, apartment owner in Germany would buy, right? So it's a little bit different from industrial and those type of products. But like software, for example, there's been a downloaded product around the world for a long time. You don't have to physically ship something, so that's easier from the logistics standpoint. So when it comes to selling directly to end users, more clients tend to do it in US and Canada, and easier logistics. You don't have to cross a border. When you get internationally, you go into a foreign country. You have certain import rules and regulations, duty rates that vary from very low to very high. I have a client in China that I went buying some plastic pellets in the US. shipped it to China, thought everything was fine, 95% duty. And this was before this spat with China started. So they had decided that they want to promote their own, of course, manufacturers of plastic resin. But the odd thing when I looked into it, I found that BASF in Germany had a 27% duty rate. So you had to look at what's the sort of the cost of the landed cost of the product and shipping cost. Another very popular way of selling a product overseas is through an agent or a manufacturer sales rep firm. So in their case, they don't buy anything from you, they sell on your behalf, and they get paid a commission on the sale. But you then have the connection to the end user, and you sell directly to them. You have to collect the money, you have to insure your receivables, and so it's kind of a direct sales of sorts, but you have some feet on the ground that are, working for you on a part-time basis. They tend to have complementary products to yours, preferably not too many competitive products, and then they visit the same customer base that your type of customers would be. So the benefit for them is they can go in and talk to customer X about, say, 6 different products, for example, at that time. The challenge with manufacturers, reps, and agents is, if your product is only 1% of their sale, that's how much time you get. So they tend to focus on fast-moving sales item or high-margin items. So you got to make sure that you compensate them adequately. Typically, an agent get a 5 to 10% commission, and the U.S. government start looking at it funny if you go over 10 as a part of sort of a bribery system. So you can't pay too much either, because then it raises a lot of red flag that there's sort of money laundering and things like that going on. Another channel that manufacturers tend to look at is technology licenses. In other words, where you have some unique IP or technology, and you might not have the resources to market that yourself worldwide, you work out an arrangement with maybe a European company or an Asian company where they license your technology. You give them sort of your secret sauce in exchange for a license fee, and then there's ongoing royalties. So from their sales, you get a percentage. You might also get some annual management fees and support, things like that. So you basically become a royalty company. There's a company in St. Paul called Image Sensing Solution. They're $12 million in revenue, $7 million is royalties. So it can work for certain companies. That's sort of a direction to go, and it keeps the infrastructure, the sales team, very small. But you have something unique to license, typically has to be patented, so you have some kind of protection to offer it. And then the last channel that's very popular with manufacturers is private labeling. In other words, Caterpillar doesn't make all the products they sell. They decide this product line from a company in Fargo, whatever. We want to buy it and put our name on it and sell it as our own brand, for example. So the beauty of that is you don't have to do any marketing or sales. You just have to deliver product to the company and they sell it. The challenge is if you have your own brand and you have your own channel, there gets to be a lot of conflict between the private labeler and yourself. So there could be kind of a difficult time to manage that as well. So it works better if the other company maybe has somewhat unique channels. Maybe they're overseas versus here, for example. That could work very well. So those are all the type of things that Mark and I work with our clients, sort of selecting what's the best channel or channels for you, analyzing the opportunities that they have and what type of customer base you have. So that's kind of what we do to help companies grow their overseas business.
That's good. Mason, when should the companies contact you in this process? When is the right time?
Sooner's better, generally speaking. Yeah, I mean, it's kind of whenever you need it, but keep in mind that there's obviously a lead time in order to get everything in place.
What kind of lead time does it have to be?
So generally speaking, if you get a policy in place before you end up applying for actual buyers that you want to approve, once we have all the information for the policy, you're looking at 2 to 3 weeks for underwriting to give you an approval on the policy, and then we're looking at, okay, which buyers do you need to improve, how much do you need for them, what information is going to be required based on that, and then we submit those individual buyers for approval as well, which can also take a 2 to 3 week lead time. So a lot of times stuff like this kind of happens last minute, and then we get the application and they say we want to ship next week. That's great. I mean, you can, but we're not going to have an answer back. So, I mean, sooner is better. Obviously, you want to make sure that you actually have a need for the policy, not just going to get it and let it sit out there. We do have clients that they like the idea of it. They know that they would have a use for it, and they know that the client will, eventually or occasionally pop up where they have a need. but a lot of times they do cash in advance. Obviously, it's the best for you guys, so if you can get cash in advance, great. But they like to have it kind of as a back pocket option in case they need to be more competitive, the buyer can't do cash in advance. Now they have this option they can use. So getting the policy in place is a pretty easy process, and you don't necessarily have to have buyers in line right now that you're ready to ship an order to. So off the bat, if it's something that you like the idea of, it'd be better to get the policy in place, and then as you have buyers that come up, maybe when they're still in the prospecting stage, it doesn't cost anything to get a buyer added, at least not with the XM side, then it's better to just get them added on, get them approved so you know what you're approved for with XM Bank, and then you can kind of move forward as the deal develops.
Dennis, could you tell us more about that Express credit program?
Okay. Well, when I saw your question, I thought maybe you were referring to the SBA's Express loan, that type.
Okay.
So I read up on that. We have an Express product, but we already talked about it. It's our Express credit insurance.
Yeah.
But I want to tell you about, I looked this up just in case. So the SBA, you know the SBA, right? They also have an export office, and it's in our office. They have a program called the Express loan, and it's either a loan or a line of credit, and it goes up to $500,000. So you get this to help you with export activities, such as you're just starting into exporting, and you're going to go to a trade show, or you've decided, hey, we know we're going to take on Mexico. So you decide you're going to translate materials. You're going to have a Spanish website. You're going to go to trade shows. All these costs that add up, the SBA has this Express loan. And what it is, it's not from the SBA, but they're guaranteeing a line of credit or a loan from a local bank that comes to you. And there's a number, we have a local bank here who does this. And so that's what this is for. So there is money available to help you get off the ground exporting. Then there's also money called Export Working Capital that we have as well at XM, and the SBA has. This line is, once you have an order in place and you're rolling and you need money to buy materials and pay for work in process, et cetera, the SBA has a loan up to $5 million. And XM is basically $5 million and over, where you can get a loan from a commercial bank. We guarantee the bank 90% that you're going to pay them back. That's our role in it as a guarantor to the bank, that you pay them back. And this helps in a number of ways. Let's say you get a big order that's much bigger than anything you've ever done, and you've got to be buying all kinds of materials. You're not getting paid. If you were getting paid in advance, you'd have the customer's money to do that, but maybe you're not. So these programs are available. Now, Steve, I might put you on the spot. Do you want to mention the STEP program?
Sure.
Yeah, go ahead.
All right, so this is money coming through the SBA. They provide export promotional funds. We're simply a pass-through agency. If you would like to, let's say you're looking at a trade show or an international promotional opportunity, and you're saying it's kind of expensive, and I'm worried about the ROI on that, and you'd like a little money to help, that's what the STEP grant is for. So I just took some companies to Israel where all the travelers used those funds for their trade show exhibition costs, their travel costs, and it's up to 50% of your overall travel costs. So you provide the cash flow. Once you've made the trip and submit your accounting, then we reimburse up to 50% of, 50% of up to $5,000. So it's not huge, but it helps.
Yeah.
So thanks for the chance to plug that.
That's free money.
It's free money.
That's not a a loan. So
Yes,
that's,
the only cost is you give us your success story.
And you will share it.
Yes, we will. Yes, so thank you.
Minnesota Trade Office is where you get that.
Well, thanks for letting us plug.
And there's actually, I mean, the insurance side will actually mix very well with the export working capital side as well. Because the way the export working capital functions is the bank is guaranteed, or EXIM or SBA is providing a guarantee to the bank that you guys, the exporters, will pay the loan back to the bank. The insurance works by guaranteeing that if you do your part, if the buyer doesn't pay, they'll pay out the exporter. That's how that functions, and actually you'll get a 25% discount on your EXIM insurance premium if you have an SBA or EXIM working capital guarantee.
But the important thing is to first build the relationship so that you don't have to go to the credit insurance, right?
You want the credit insurance even with the relationship, because if you have a non-payment, you can't come back to EXIM and say, hey, guy hasn't paid me, can I get insurance? It's like saying my house burned down, can I get fire insurance?
But if you build a strong relationship, that's what we do for helping you go international, is work with your customers and your networks.
I want to comment on the STEP grant because it's a fantastic program for small exporters. I was actually at a world's largest agricultural show in Hanover, Germany last month with my client from Pine River. They also have a forestry section. So we used the STEP grant from the state of Minnesota, actually 2 years in a row, to pay for the $9,000 for the booth and for travel costs, rental car, and all those type of related costs. So it was probably $15,000 for my client to do this first show ever outside of the United States. So there was a show, 7-day show, 9-hour days. Germans love long trade shows. 450,000 visitors. John Deere had a booth the size of a football field. Case New Holland had a building by themselves. The booth, we were told, was cost $2 million. Just the booth. Not bringing the equipment, not the staff, not the entertaining. Most booths had, food and beer and wine at the show. So $2 million just for the booth. Now this is every 2 years, but obviously it's worthwhile for Case New Holland to have this gigantic show. So, but that's, once again, it's something we never could afford. We're part of a USA Pavilion, so we had a 10 by 20 booth at the show, and we got met a lot of our current customers and also a lot of potential distributors. So it's a great way to sort of break into the market. And Steve's got a big piggy bank, lots of money, willing to give it away.
So with that, we've run up to our time here, and I want to thank all of you for coming, and to Chum for arranging this. This is just scratching the surface. Let us know. We'll be around, and if you'd like to continue these discussions, we're here.
Thank you so much.